Nio stock nosedived on Wednesday, dropping more than 10%. And now Nio stock is down more than 40% since the beginning of January. So is it time to run or is it time to buy the dip? Finally, analysts are starting to agree on something. This is a must-watch video for Nio investors where I will look at the very latest Nio news and what this means for Nio going forward. But before we get into the video, I want to thank everyone who has been following the channel, watching my updates, and subscribed to the channel. In the past few days, we have just hit 21,000 subscribers. So if you find any value in this video, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 400 likes on this video. Help me achieve this goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. Now there's a lot to discuss, so let's get straight into it. So the first thing I want to talk about quickly is this. William Li says that the EU probe of Chinese electric cars does not make sense. So Brussels is investigating whether Chinese car makers use subsidies to cut the prices of their vehicles in a probe that is widely expected to lead to higher tariffs. Last week, the US announced a quadrupling of tariffs on electric vehicles from China to 100%, aimed at preventing groups such as BYD and NIO from building market share in the US. But both BYD and NIO are not going to be deterred by this. NIO has built a reputation as a premium brand, and Li said the company also wants to introduce lower priced models into Europe. Now, we already know that NIO has recently launched the Envo sub-brand codenamed Alps for the Chinese market and have Project Firefly for expansion into the European market. And I'll talk more about the important European expansion in just a moment. But first, NIO just launched another NIO house in the heart of Amsterdam this week. The new showroom is its second in the Netherlands and seventh in Europe. And William Li has warned not to use EVs as a political target amid EU expansion. Now, analysts are finally starting to agree that this is not a time to be ignoring NIO's recent progress. JP Morgan Chase, which has been a long-time critic and constantly rating the stock as a sell, have finally removed their sell rating. While investor Stonefox Capital has become more bullish than ever, stating here that my investment thesis remains ultra bullish on the large opportunity ahead for the Chinese EV company with a high volume brand utilizing advanced technology from the NIO brand. Remember that deliveries will begin in Q3 with the vehicle going head to head with Li Auto and Tesla Model Y. Now, I first seen this over the weekend on Reddit with regards to NIO's battery swap as a use case for taxi drivers. Stockholm Taxi drivers praised NIO's electric car for 4-minute battery swaps, so I decided to check out the article, which is in Swedish, so please ignore any grammar errors here as Google Translate isn't always the most accurate. Stockholm Taxi drivers praised NIO's electric cars. That's how much they earn. Taxi Stockholm had already signed an agreement with NIO. Now Carbon Line also joins the collaboration with NIO and offers its drivers the flagship model NIO ET7, giving thousands of taxi drivers the opportunity to avoid fast charging during working hours and easily change to a charged battery in just 4 minutes. Now remember that NIO has only just recently expanded outside of China, and Sweden has had a focus on EVs for a number of years now. In fact, Scandinavia is leading the way in terms of EV adoption. Recent figures show that EV takes up 63% share of all passenger vehicle sales in Sweden. And this follows on from Norway, where the Norwegian EV market now accounts for 91.5% share of all vehicle sales. But now you are probably asking, what does any of this have to do with NIO's battery swap technology in particular? Surely this applies to all EVs. After all, NIO only has a tiny percentage of sales in Scandinavia so far, but it comes down to cost. Not the cost of the vehicles, but rather the cost of lost earnings. This is how much taxi drivers earn on battery replacement. Without NIO's battery swap, they believe they would have had to turn down runs if they had to stand at the fast chargers. As quoted here, with a regular electric car, we lose about an hour and a half per day charging compared to when we drove diesel-powered taxis. For us, with 2 drivers, it will be approximately $1,500 per day or $7,500 per week in lost revenue. Now, I'm not Swedish and I had no idea how much 7,500 Swedish krona actually is. But using a simple converter, we can see here that this is actually $690 per week. Now, I've not been in Sweden in a very long time, but I think it's fair to assume that $690 a week means a lot to a taxi driver in any country. That equates to around $35,000 a year. So I've been talking about the potential of battery swap for a long time, and if you follow my channel, then you'll know that I talk about battery swap as being one of NIO's major differentiators that sets it apart from all other EV makers. But I think this highlights the advantage of battery swap even more than usual. Here we have a taxi driver that clearly says, honestly, we would rather drive fossil-powered cars than electric cars up until we discovered NIO and their EVs with battery replacement. Being able to quickly switch to a charged battery means that it works with an electric car in everyday life as a taxi driver. But guys, what do you think? Is NIO more suited taxi industry than for everyday drivers who can afford to wait for the battery to be charged? Let me know your thoughts in the comments below. There is another clear thing of interest when it comes to NIO stock right now, and that is on the earnings side of things. Now, NIO are due to report earnings in only a matter of days on June 6th, which I'll discuss in just a moment. But specifically right now, I just want to highlight that in their most recent earnings report, they reported total assets of $16 billion US. Of this $16 billion, more than $7 billion is made up of cash, and a further $3.5 billion made up of property, plant, and equipment. That makes up more than $10.5 billion. This is more than the entire market cap of NIO, which is kind of crazy. NIO is currently trading at a price that does not take into account of its brand, the technology, or all of the infrastructure that NIO has been putting in place over the past number of years. Now, I know that NIO has dropped a lot since its all-time high back in 2021, and that anyone who invested up here could be down more than 90%. But a question to ask is, how much progress has this company made since its all-time high in 2021? Is this a better company now in 2024 than it was back then? And the answer, I feel, is very simple. 2021 was a time of EV hype. But where are the majority of these EV companies now? Think of Lordstown Motors, think of Workhorse or Fisker, ELMS. Where are these companies now, and what have they achieved since the EV boom of 2021? Most are long since bankrupted. NIO might have dropped in price, but this is a monster of a company compared to the other EV startups. And NIO has spent its time investing in itself and its infrastructure for years. Now, like I said a moment ago, NIO is due to report earnings in only a matter of days on June 6th. Analysts are expecting EPS of minus 282 on revenue of 10.45 billion won. If you would like to see a NIO earnings preview analysis, then let me know by liking this video and leaving a comment in the comment section below. When I get 500 likes and comments on this video, I will do the earnings preview. There is a lot of talk on social media right now about this stock, but always do your own due diligence. Remember that I'm not a financial advisor and this is not financial advice. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in